Hi guys and welcome back. We're obviously now halfway through 2023, which represents an end to quarter two. Quarter two is the best performing quarter to date in terms of our dividends paid from the portfolio. We ended up netting $637.24, which compared to quarter two of 2022 represents an increase in growth of 54.6%. The portfolio grew from $64,168.03 to $66,275.59, which is a gain of $2,107.56. $246.62 came from capital gains, while the remaining $1,223.70 was added via cash to the portfolio, which results in a dividend and cash contribution of $1,860.94. Average daily income for a 12-month period is now at $3.30, while monthly income for a 12-month period sits at $100.24. This will continue to increase as the year progresses and we net more dividends. If we just look at averages for 6 months, as in the first two quarters, then it's obviously a lot higher, with average monthly income being $200.48 and daily income being $6.68. The worst and best performers of quarter two were both non-dividend paying stocks. The worst performer to date was Pacific Edge, who lost a whopping 83.15% at the time of recording. This is in relation to their most recent earnings reports not meeting investors' and shareholders' goals. Their total equity has decreased from 2022 by approximately $20 million, and their earnings per share has only increased by 26.9%, which I believe was a little bit shy of what shareholders were hoping for. Apart from that, though, their gross profit has increased by a substantial amount, growing from $11 million in 2022 to just shy of $20 million in 2023. The best performer was Iron Semiconductor Corp, who had a 130% increase since I started my position back in 2021. Since the start of the year, they have increased their stock price by 51%. This is due mostly to the cost of lithium and the high demand for the products they produce by end users in the market, one of which is Tesla, who uses the semiconductors in their cars. We've finally started to see a bit of a return. Towards the tail end of quarter two, we were just shy of making a positive return. Since then, in the middle of July, the time of recording, we're now looking at a return of 2.3%. As you can see, my holdings by type have been spread across companies, ETFs, and managed funds. I have 72% of my value in companies, 27% in ETFs, and 1% in managed funds. Although we are now in July, this is what my portfolio looks to date with my current holdings and their return, as well as the amount I have in each of these holdings. Total payments for 2023 can be seen here in this calendar graph. Out of the approximate 180 days of quarter two, I was paid on 60 of these 180 days. My highest grossing day is still $123. The approximate income, as said, is for the 12-month period and not adjusted for 6 months. On this next graph, you'll be able to see each stock and how much it has paid me out to date. All the months in 2023 have since netted a positive return and compared to the amount that they have gained since 2022, apart from February. We're slowly reducing our capital loss overall. Since January of 2023, we've had a gain of $5,296.08. For the most part, my forecasting of dividends has been off, and I will look to improve upon this for the second half of 2023. Our average portfolio dividend yield for the first half of 2023 is now at 5.22%, which is still under the 6% threshold. As stated earlier, for 2023 we've managed to earn $1,202.88 during the first 2 quarters. When compared to the same time in 2022, this represents an increase of 84.7%. With this in mind, our portfolio was $43,107.64 in June 2022 and $62,410.74 in June 2023, which represents an increase of 44.8%. So it's good to see that dividend growth has been able to outpace our capital percentage growth, as it essentially means for every 1% we add to our portfolio, our dividends will again grow by 1.89%. Looking forward towards the end of the year, I'm hoping to be able to net $2,500 in dividends for this year alone, which will be an increase in the amount we earn in 2022 by 45%. I'll provide an update of July midway through next month. Thanks for watching.